Morning, Fractal Effects team. Before we get started, make sure you read the disclosure in the footer section of fractaleffects.com. We also have one on our YouTube channel. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we had, since it was a long weekend, usually Tuesday behaves like Monday, and Wednesday usually behaves like Tuesday. We have a buy model, triangle pattern here. That was the first presented fair value gap. After the triangle pattern, the market came back in, filled that, gave us a double break to the upside. We have a double break to the downside here. Same thing with the US 30. We had a double break to the downside into a 4-hour. On US 500, we have a double break into a DSD low. You can see that immediate rebalance. So what I'm waiting for is I'm more interested in NAS. It's telling a more consistent story right now. There's a 4-hour fair value gap that it hit, rejected, and now ripped through. There's previous day's highs. What I wanted to see from NAS, and let's hope it's not a runaway market today. After you get that double break, I wanted to see a proper retracement back to one of our blue zones. This is one of those instances where it's just one big candle. We had a tight range and a lot of big candles here. We had high impact news drop at 10 o'clock. It's previous day's high. But I do want to see a proper retracement. And then on US 500, I cannot technically buy this market. We have a upside expansion. We have a bullish confirmation. We have a double break to the downside. So it's inconsistent. Even though we hit this DSD low, I would have liked to hit this DSD low without getting a double break. You got to stick to your rules. Plus, after this bullish confirmation, there's most likely a chance that we will get a retracement back into our range. There's your bullish confirmation on NAS. So this one's a little tough, just because all of our ranges have been hit, all of our targets have been taken. I wanted to get that retracement and then go up into previous day's high. Excuse me. So let's see if it actually gives us a proper retracement back into our range and sets us up. Other than that, it's comparable to a runaway market. There's nothing we can do here. This is the first fair value gap it even created after we had the double break. So we'll mark this out and we'll see if the market can get deeper than this, or if this is as deep as it wants to go. Let's see if it even comes back down here. The other thing to remember is we're in a lot of higher time frame PDs right now. We're sitting in a lot of premium and discount arrays. This is a daily with a 4-hour. We just took liquidity here from previous day high. Let's get rid of this one. And there's another 4-hour up here. 4 minutes, 30 seconds left. Let's see if it leaves another fair value gap here. Remember, you only want to trade when it looks easy. Right now, this range was just so tight, it didn't really give us anything. Even this fill-in was pretty quick. It was down, up, and a push without any fair value gaps here, except for here. Now the question becomes, do I want to take any trade setup from here if my low-hanging fruit's already been hit? My low-hanging fruit is usually the DSD high, which is already down here. We already went past that. And my second low-hanging fruit is usually either London or Asia highs, which again, also taken. New week opening gap, also taken right there, that orange box. And then the final one is previous day's high-low, already taken. So we've broken past a range. Once you break past an entire dealing range, then you want to proceed with caution. Like I said, there's a 4-hour up here, but I'd rather take a look to see if there's any asset right now where we haven't broken past the range. This is actually pretty similar to what happened yesterday. Yesterday we had a double break to the upside, triangle pattern, and US 500 gave us two double breaks. Double break to the downside and a double break to the upside because we had hit a 4-hour fair value gap and rejected it. Just going to check US 30 real quick, see what we got over there. So double break into a 4-hour fair value gap. Asia is inside London, so inside the range. We did have a buy model. No fair value gap left here. And we just came back to the DSD low and filled in this first fair value gap. We're back at a purple zone. No confirmation though. We might get a repeat of yesterday. So NAS is pretty much, I compare this to a runaway market. Even though we have all the confluence to the upside, it's not really it's not giving us an opportunity to get in. I'd like to see if it comes back down here. Until it comes back down here, I'm not really interested. It's already filled that in. delete some of this stuff. That was the point of control here. Ripped right past it. Just going to check US oil real quick. See if it's telling a more consistent story. These are all old levels, so I'm going to delete them. Break in both directions. Let me check this on a higher time frame to see if we're sitting in any PD array. It's a huge daily rejection. Let's check the 4 hour. Four-hour lows, but also another 4-hour fair value gap that we're sitting in right here. So it's a little rough to see. I got a lot of things activated here, but you can see it's right there. Those are all the levels we're looking at. So we're sitting inside of a 4-hour fair value gap. I want to see which side gives me a confirmation and a double break. Because we have a sell model right now. Downside expansion, sell model. Remember, when you have a sell model and you break to the downside first, the highest and the most you can like trade to is the blue zone because it's still a sell model. You can trade to the blue zone because you might get rejection here and then it might complete the model itself. Yeah, the indices are a little sloppy for me right now. Five minutes to 11, let's see what happens. US oil seems to be the only thing that is telling us a more consistent story today. I'm going to check Brent crude oil as a diverging pair. all these levels. Same thing, we broke to both sides. Sell model sitting at the new week opening gap. Same thing, sitting at the new week opening gap, that orange box. That was the first presented fair value gap. Has not been tapped yet. We'd obviously need a 5M bullish fair value gap here first. Otherwise the market could just keep dropping from here. Just going to jump over to NAS for a second. See if it kept running all the way to that 4-hour. Nothing from NAS yet. So if we get a bullish 5M fair value gap, I want to see if that sets me up to go back into here. Or if we get a double break first. But again, sell model. This is the highest I can trade into now. If I get a if I get a bullish fair value gap, usually the blue is the low-hanging fruit, but when you leave a first presented fair value gap wide open, that becomes the zone you want to trade into. That becomes my low-hanging fruit. But I first have to get a foothold. Let's see if it gives me one. Otherwise, like I said, we could get a double break, retracement, and then a drop. But still waiting, either a fair value gap or a double break. Let's see which one it gives me first. Just got to remain patient. That's literally 95% of the game is patience. Brent crude, same thing. There's your first presented fair value gap. I want to see if I get a 5M bullish fair value gap as a foothold to climb back into it, or if we get a double break and a bearish confirmation. If we get a bearish confirmation and a double break to the downside, it could still retrace all the way back up here. It's just that I'm not looking to buy up into here. I'm looking to sell from here down then. That's how that changes. So I know the market wants to come up here. Is it after the double break or is it going to be before? We'd like it to be before with a 5M bullish fair value gap. But again, if we get that double break, I cannot trade back up into here. I can only wait for the market to come back up here and see if it sets us up to take a short. That's how quickly your bias changes. We're red across the board right now. 1, 5, 15, 30, 1 hour. 4 hours the only one that's green. Daily. Makes more sense to look for a sell. It's also a sell setup. We have a sell model. The only thing that could change that is we're sitting inside of a 4-hour fair value gap, which we could reject. Just got to proceed with caution. Again, let's see if it sets us up. So power of 3 happening here. We have consolidation. Let's see which way it manipulates. Let's see which way it wants to actually push. For the time being, I'm going to put US 500 back up here just to see if we get that double break. So remember, we don't trade when you get a double break in both directions. We don't trade that. We want to see one consistent story. That was your break to the upside. So right now this is, let's see if this gives us a double break. No fair value gaps in here. We'll just mark this off. It's the only fair value gap that was even left after the double break. Still a whole bunch of nothing. Consolidation. Let's see if it breaks. Well, oil really just stalled there. Same thing with the indices. They made their big move. There we go. Let's see if we get a displacement here. So we have a bullish confirmation from the spotlight and a double break. So I'm going to watch to see where this goes, but I'm not actually interested in taking a trade here. This is not telling me a consistent story. And NAS is telling a more consistent story, but at the same time, bullish confirmation, double break to the upside. At the same time, NAS has kind of hit the targets I was looking at, my low-hanging fruit for the day. I was hoping to come all the way up into this previous day's high, this yellow line. So it's already done that. I'm not saying it can't go higher, but when you're already above the DSD high and you're already above previous day high, you want to proceed with caution because it could technically turn back around. Look at the 4 hour. Just swept out that high. It also swept out these highs, these 4 hour highs. So it could technically turn back around and still respect this 4 hour fair value gap on a higher time frame. We could see a wick to the downside. But this is the first presented fair value gap. Let's see if it even comes back down into here. But right now, oil's just telling a more consistent story. It just seems to be stalled, consolidating. But it's still telling the more consistent story with targets up here for the time being. So let's see if it sticks. But that's how you use diverging pairs. You want to make sure that one, there's target still left, and two, that it doesn't void the trade. That all your rules don't void the trade. Because right now this has been voided. This bullish confirmation means there's an 80% chance that the bottom of this range will not break. This double break means there's a 80% chance that the market wants to go down, especially the fact that we have a triangle pattern. And if we get another double break up here, you get that 2 double break, that's void altogether. We don't trade that. So it's sloppy. You don't want it to be sloppy. You want both of these indicators to be telling you the same story. A little over 15 minutes left in our stream. Let's see if we get some kind of movement. US 500 back at that fair value gap. US oil still consolidating. Has not broke out of this range. So we're back at that 5M fair value gap. 3 minutes, 32 seconds left. Let's see if we get any kind of immediate rebalance and if this goes for a double break to the upside. Just curious, just going to take a look at NAS real quick. Again, just very sloppy. NAS is telling a clean story. It's just I don't like where it's already gone. It's taken my levels. I don't want to necessarily aim for this 4 hour because it could still turn around here. On the 4 hour, this could just be a wick, and it could respect this 4 hour fair value gap. NAS back at that fair value gap as well. Just going to check oil again. Put 10 minutes left in our stream. I'm not sure if oil is going to push. Let's see. Okay, so we finally broke out of that range. 3 minutes, 52 seconds left. There's your double break. So now what do you do after you get a double break? We wait for a retracement and then a drop. Not sure if that's going to happen in our window of opportunity. I also want to see if this bearish confirmation sticks as well. That'll be just added confluence because it could just retrace right into here and drop. But I'd be interested from here. But again, I cannot buy up into here. I can only wait for it to come in here and then sell. US 500 has left this fair value gap open. So we're back at the blue zone. If we did not have a bullish confirmation, I'd still be interested in seeing if this sells off. But the fact that these two strategies are conflicting, the other reason I would have been interested in seeing this sell off is because the point of control from London is right down here. This is where most people went in for a buy. So it's right below. We didn't hit it quite, 61% to 71%, with a double break to the downside and a 4-hour fair value gap down here. So we've already hit this 4-hour fair value gap. There's a 4-hour fair value gap down here. This could be an absolute reversal. It's just because of this bullish confirmation, I technically cannot do it. It goes against my rules. Six minutes left in our stream. 32 seconds left. I want to see if this bearish confirmation sticks. Then you cannot buy this market. Everything is red. We're just waiting for a retracement and a push. Okay, so there's your confirmation on oil. So oil is telling the most consistent story currently. I want to see if Brent crude oil also gave us a double break. Looks like it. Double break and a bearish confirmation. So these two are right now moving in unison. So now we want to see a pullback and then a setup. But there's only 5 minutes left in our window of opportunity. Let's see if that happens. So this will be our last candle. We got 2 minutes 13 seconds left. So we're going to leave you with some homework. Make sure you know how to recognize these patterns and know when a retracement is done. Usually a retracement is finished when you see a pullback into the range, the dealing range. You see an immediate rebalancing candle, an engulfing candle, expansion met with expansion. So usually like something like this where it wicks up and then it wicks down. But this green one should be engulfing this red one. So you want to see that, and then a 5M bearish fair value gap setup, which the market should come back and tap and drop. So come back later and see how far it actually retraced. Did it retrace all the way back into that first presented fair value gap? This is the one we wanted to technically take it all the way up to if we had a bullish 5M fair value gap. We would have used that as a foothold to get back up here. So let's see if it retraces all the way back up into here or just up to the 20 and the 50 EMA and then drops. The window of opportunity is closed. So we'll move on from this. Please check us out on fractaleffects.com where we teach high probability trading. Please hit the subscribe button, turn on your notifications. Hit that like button if you learned anything today. We're live currently Tuesday, Wednesdays, and Thursdays, so we'll be live again tomorrow. That's our time. Have a good rest of the day.